Hello everyone, this is Garrett from Garrett Wealth Management with our April 2014 Economic Update. In this video, we'll be talking about some of the major market events that occurred in April. We'll also be discussing what might affect markets in the days and weeks ahead. And remember, please stay tuned at the end for a required disclosure statement. Markets had a turbulent month and the major indices ended on a mixed note. Despite the volatility, the Dow hit a record close on the last day in April, indicating that investors are still willing to rally on good news. For the month, the S&P 500 gained 0.62%, the Dow grew 0.75%, while the Nasdaq lost 2%. First quarter earnings season kicked off in April, and while the cold winter caused weak growth, company performance wasn't too bad. Overall, earnings and revenue growth were both up, though many firms struggled with slow demand. Business leaders did a good job of lowering expectations so that investors weren't surprised by mediocre results. Economic data was generally positive last month, suggesting that the economy is still on solid footing and that the seasonal effects of the chilly winter might dissipate this spring. The Federal Reserve met in the last week of April and voted to continue tapering bond purchases. This wasn't a surprise, but it's good news because it shows that the Fed continues to have faith in the economic recovery. Consumer spending, which is a major component of economic growth, soared in March by the most in nearly 5 years. Warmer weather brought Americans back to shopping malls and car dealerships, giving us hope that the economy is regaining momentum in the second quarter. Jobless claims rose unexpectedly in the last week of April, though economists believe that most of the increase is due to seasonal effects. The Easter holiday and school spring breaks can cause wild swings in data this time of the year. We'll know more about the underlying strength of the labor market once the monthly jobs report is released. We got our first look at first quarter gross domestic product growth, and the current estimate is that the U.S. economy grew a sluggish 0.1%, mostly because of the lingering effects of the harsh winter. Now keep in mind that this is just an estimate, and revised data may show a rosier picture. The housing market, which has been a major driver of economic growth in the last couple of years, may actually be faltering a bit. Rising mortgage rates, higher prices, and cold weather caused sales of new and existing homes to fall in April for the third month in a row. Now, on the other hand, tight housing inventory and improving employment prospects may encourage buyers this spring. The crisis in Ukraine continued to simmer and actually tempered market activity last month. While large-scale violence has been avoided thus far, Russia amassed troops on the border of Ukraine, and the new Ukrainian government seems to be losing control over much of the eastern part of the country. It's impossible to know how the situation will play out, but investors are mostly concerned about how potential natural gas disruptions might affect corporate profits. Looking ahead, investors will be closely watching economic data to see whether the seasonal effects of winter are giving way to stronger growth in the spring. While we can expect more volatility, we can hope that better second quarter prospects will show investors that there's still plenty of upside to be had. Once again, this is Garrett with Garrett Wealth Management, signing off for the month of April 2014. I hope you found this commentary interesting and informative. If you have any questions about what you heard in this update, or you would like to discuss your personal financial situation, please give us a call at 817-596-9301. We'd be happy to talk to you.